right. Good morning, good afternoon. How's everyone doing? How was July 4th break? Did you have a good time? Great, great. Nice, nice. So what else? We had a very short week for the market. I don't know why market was off on random days, and it was a little weird. Right? You get July 3rd half day, and then July 4th was off, and July 5th market was on. I'm like, whatever. So a little weird, but yeah, well, we got a break. We got a break from market for a day. So anything new? Anything new that caught your eye? We'll wait. Tesla came alive. Tesla has been Tesla has been, I think I have a chart somewhere. Almost 40% up in a few days. Gosh. Yeah. And I guess Tesla bulls are back. The Tesla fans are back in the market. The stock was trading 140 not too long ago, and now Tesla is at. Let me just pull up the Tesla chart. Tesla is at 250. Yeah, 251, but it's up 38% in 9 trading days. Like on an average, you can look at like 5% per day. Crazy move. And this is a lot more about, I guess, expectations than anything else. So we will look into what drove this. I'm not even sure that I can qualify, this whole up move. But yeah, there was sentiment change in Tesla. So everyone now piling up on Tesla. We have seen these kind of moves even before also. So, but that's market for you. What else? So Tesla is one thing. We will talk about Tesla. What other stock? Or what else you may have in mind? Anyone here for the first time? Just wondering, anyone joining? Anyone out here is new? Okay, Alfred says many people are getting long volatility with the high expectations that election will increase volatility. People buying downside protection puts. Wall supply reaches a high level. If everyone purchase protection, it's harder to get a crash which stabilizes the market. Yeah, just in a few days, Vanguard large cap is up 4.5%. So even though the market hit a new all-time high, I noticed that the VIX was up. I think it was Friday that VIX was up even though the markets were up as well. So I was just looking at maybe folks are buying protection or they're investing in, and I'm going to talk about a new instrument that I came to know last week. It's called HELO, in which, that is one of those new instruments which buy puts. Ravish says Palantir. Yeah, Palantir, it's more than 25. The story is 27 now. Ramesh says Avgo, which is Broadcom, split on 715. Remind me, what's the split ratio? Is it 10:1? Broadcom, AVGO. There are so many stocks, like 2024 should be labeled as a split year. We're having so many splits. And CMG is splitting. I think CMG probably already split. I don't own either Broadcom. Yeah, CMG already split. I guess this was 20:1. Broadcom is going to be 10:1. Dad says brand new. Welcome, Dad. Good to have you here. So how did you come to know? Just on a meetup, or did you hear from someone else? And guys, if you want to talk through it, you can just unmute yourself. And that you could respond. Okay, meanwhile, let me look at the comments. CMG 50:1, that's already done. Solar Edge and Enphase. I think, was it Enphase that has got like huge drawdown? Yeah. Again, I've not been tracking these. So these solar stocks are always tricky because we have a tough competition. So it's more dependent on regulatory help in terms of how much import duty we can put on these solar imports. Number two, because of I think not in terms of from a housing perspective, it's also dependent on the housing sector. So yeah, Enphase is that solar S. I think Solar Edge is SDGE. No. Which one is Solar Edge? SEDG. Oh my God, that's one ugly looking chart. And I'm just looking at the company. Yeah, so pretty bad 2023 year for Solar Edge. Revenue after being, up almost 50%, 45% on an average, they had a huge decline after many years of continuously growing the revenue. So no wonder market is like pissed off from solar. Net income down almost 63%. No, from a cash flow positive, they turned into huge cash flow negative. Very little operating margins. It's a tough business to be in. Huge XPX calls and barely puts coming for this week. Folks are swinging what, 0 DTE XPX? I don't do that, but yeah, some people want to have fun with 0 DTEs. A PR, what is PR? Permian resources, yeah, oil and gas. Not my area where I have any, I would say, advantage or expertise. So I'll just stay with ETF when it comes to the areas where I don't have, where I don't understand what drives the business, what drives the competitive edge, what's the moat. Same is the case with the Solar Edge. I mean, if I were to do these renewable or solar, maybe I'll look at ETF 10. So Permian resources. How's that stock? Well, 5% down for a day, but how big is this company? It doesn't have the market profile statistics. There we go. It's $12 billion company. Enterprise is 16, means almost $4 billion of debt they have. It's a nice dividend yield. So payout ratio 67. So I don't know. Yeah, a little bit on the higher side, but a pretty nice dividend. If you're a dividend player, then that's pretty nice dividend. I don't know what's your thesis of investing in this is, but it looks like it's from a dividend perspective, it's looking good. Ravi said, what's your criteria to select ETFs? So I will pick ETFs if I don't understand the business or sector of a particular company, then I'll go and pick ETF from there. I would want to diversify my portfolio. So, and let's say if I want to have a stake in energy, I don't understand how the exploration will work. I'm not a geologist. I don't know why one's resources are better than others. So then I will go and pick an ETF. So that's my criteria for ETF. Then I will look for which one has got better, like which one is a bigger ETF. Then look at an expense ratio. Then I look at whether it is optionable or not. And these are the things that will then drive my decision on, yeah, I want to pick ETF A over B. Like, look at Vanguard. I don't have Vanguard ETFs, even though they are very, the expense ratio is very less. They are one of the cheapest ETFs available. But damn, options are horrible on Vanguard ETFs. So I can't, reduce my cost basis or buy it at a cheaper rate. So that's one reason I don't own Vanguard ETFs. But yeah, I'll do SPY rather than VO. So that's my criteria, right? Expense ratio, optionable, and it should have a good AUM, and some liquidity and some history of performance. I don't want to invest in ETF that just came out. Let's say AI ETF that came out last month. Yeah. So yeah, that's my ETF criteria. Risk management will be by option selling, yes. So that's what I have to look for, if is it optionable or not. PDD, that's a pin duo duo. Yeah, Chinese stocks. I think, again, when it comes to all the Chinese stocks, they're still, PDD is doing better than Baba. At least that much I would say, in terms of the stock. I don't know, let's look at PDD in terms of are they buying back shares or what are they doing? Like Baba is going crazy in buying back their shares. So PDD is not much. Shares outstanding 1.42. Oh, that's expensive, 18.16 PE. No buyback. Let's look at Baba. I love this. So Baba buyback yield itself is almost 4%. And that's, I think, and then it pays almost 2% in a dividend. And I think in this year, especially 2024, Baba has doubled down on its buyback. They've already bought back 5% of their outstanding shares by end of June, like 5% of their outstanding shares. So I think I've said it earlier also. If Baba was incorporated in US, I would have been buying it hand over fist. Not a recommendation, but I just can't put any numbers on the risk because it is in China, and that's why I'm not buying. Otherwise, this is one of the most undervalued share that I've come across. It's a free cash flow yield is like 14-15%. It's been buying back its shares. It pays dividend as well, and it's a big e-commerce player, right? Not a fly-by-night operator. But the biggest trouble is it's in China. So then you have to be careful about how you want to play any stock which is in China. Bond ETF, TLT, because TLT is optionable. That's my go-to vehicle for bond ETF. Other thing is I like to park cash in ICSH, or you can pick up SGov. You can pick up any short-term treasury bills ETFs, which will, why hold just cash? Damn, you can get like 4%, 5% in your T-bills ETF. So why hold cash? So I'll buy ICSH and hold that. But my bond is TLT. I've been dealing with TLT for many years. It's good option liquidity, and that's my go-to instrument. Aditya says, good morning. Can you please explain what zero DTE means? Okay, if you're dealing in options, this is the new craze of zero DTE. Means that the options that get created and expire on the same day. So it's like, if I want to take a bet just for today, and that's an option that expires just today. And ever since, I think it was 2023, SEC and they allowed 0 DTE to start trading. It has taken, I guess, not just the retail, but also many institutional traders. It caught the fancy of them. And the fact is, 40% of the option trade volume on some of these SPX. So I think 0DT is available on XPX. I don't think it's on SPY. Again, I don't trade it, so I may be a little wrong. But 40% of XPX volume is coming from 0 DTE options. Crazy. Some market experts also say that the volatility that we see is, in the markets, they are exacerbated because of the 0 DTE. Who knows what's happening? But that's what the 0 DTE means: 0 days to expiration. Option get credited in the morning and they expires by the end of a day. So, and I've spoken to a few folks who will do it, who will buy or sell an option and then close a transaction within 2 or 3 minutes, because we have a lot of a gamma risk. You really need to monitor your positions. So, and that's why I don't do it. Do you do options? Yes, been doing it for a few years, and that's my go-to strategy to reduce the risk in portfolio. Nancy says one can get 5.3% brokerage money markets. What do you think of that? Yeah, that's also true. The only difference is on the T-bill side, you get a tax benefit, which is you don't have to pay state and local taxes. But on money market fund, that that gets added to your regular income, right? So that's the only difference. But yeah, why take a hassle? My only intent was I'm not driving towards a particular instrument. My only intent is just don't keep cash. What's the point in keeping cash? When especially with these big money center banks, they're gonna pay you 0.01%. Yeah, of course, if you have upcoming bills, you keep the cash for next 2 months for your expenses. Otherwise, get a money market fund, which is pretty safe. Get T-bills. If not, maybe get a CDs. There are CDs like 11-month CDs if you can. That will itself will pay you, 4%, 4.5%. So either way, the idea is so earlier, cash was trash, right? Now, cash damn makes 5%. Cash makes money. So, invest the cash in some money market. I'm fine with even money market. Very low risk instrument. Even money market is a very low risk instrument. There's almost risk free. Khatri said, do you teach it as well? Yeah, so once in a while I'll do these options boot camps. Currently there is one option boot camp which is already going on. So we meet Wednesday, but I've already done 10 sessions of it. So it's overall 13 sessions. So 3 more sessions remaining in options boot camp. If you look into the meetup and look at the past events, I will, I schedule it on the meetup. Do you trade live every day? No. I don't do that live streaming or live trading because I am not a day trader. Number 2, don't want to be too active trader. That I do my own stuff, but I don't have this live trading every day. And I don't have any subscription or anything membership to sell you and hey, you can join this Discord, etc. I have a Slack, but which is free. You guys want to join Slack? I think the link is there on the meetup or the intro. Maybe I can paste it if I have that handy. But no, I don't do live trades. But do I trade every day? Oh, yes. Yeah, almost every day I will do some trades. Majority of nowadays, most of those will be trying to hedge the positions and trying to build a portfolio right now, like very active building August portfolio. And that will be the case for next 2 weeks. Then it will be little die down. because you enter a period where you can't, don't want to close it, it's too soon to close, and don't want to open new one because it's too late to open, and then you get into the closing phase. Will you not do any more after the 3 sessions? No, that takes a lot of time. So the only reason why I did this boot camp after gap of 4 years, I think last boot camp I did was in maybe 2021. Then after 3 years, because many of you wanted to get started on it, but yeah, it does. For now, I've not decided if I'll do another one or not. It depends, on the time availability. Peak, anyone doing penny stocks here? Not me. Never done it. At least I don't know of anyone who actually does. That's not my style of investing. Nancy says, yeah, I agree. Don't keep cash in banks. I've been putting a lot of cash straight into big AI stocks. So Nvidia, those big fives making 22% this past year. Do you see any big risk in keeping the funds in individual stocks or continue to add it at least for the next 1 year? So Nancy, no one can predict what's going to happen with the stocks in next 1 year, right? So I have been, from my perspective, I'm not putting any new capital in Nvidia. I think it's already has run up too much, more than what it deserved. Right. But that's a statement I made like 6 months ago also. But Nvidia still continue to go up. Right. So in a short term, what can happen? No one knows. Right. Meta just hit its all-time high. Recently, Amazon hit its was above 200 this week. And yeah, last year was a great year. I mean, I bought in a lot of stuff in 2022 because that's where the opportunity was the maximum. Now I'm doing my regular, whatever regular investment cycle, but I'm not going too big on any of these individual stocks right now. I'm selling, let's say, Iron Condor if it falls down. So for those, Iron Condor is a type of option strategy in which if it falls down, you get an opportunity to buy at a lower cost. If it goes up, you have opportunity to sell it at a higher price. If it stays between your strike prices, you make some money and reduce your cost basis. So right now, that's what I'm doing on Amazon. I have a August 16th option trade on Meta, same thing. Microsoft, the same thing. But who is me to even figure out what will happen to these AI stocks? Can they continue to go higher? Yeah, if we continue, if they continue to perform. So we will talk about drill a little deeper into AI and what's a hole that these companies need to fill in. Right, a $600 billion hole. I think I put it on LinkedIn. Around it, there's a report from Sequoia. So next 10 years, will these companies be bigger than where they are? I'm sure. But it's not going to go like this. It might go like this, right? So, and when the drawdown will happen, no one knows. So Nvidia didn't perform, right, this week. Nvidia was down. So I don't know how long the craziness can continue. Can you repeat the option name of the buy down you mentioned? So there are many option strategies. So if you really, I will point you out to the recording. Let me just hold on. So the bootcamp sessions that I've conducted, the recording is available for anyone to go and view it. It's available for you at no cost. So the basic strategy is called cash secured put. You sell a put, which will allow you to buy the stock if the stock goes down and hit your strike price, right? So if you're new to options, that's the first one you should start with. That I covered in drill number 1, introduction to options, a newbie strategy to acquire shares, basically how you use options to acquire shares at the lower than where it is trading currently in the market, right? You could do a limit order, which is what I used to do before I started dealing in options. But if stock doesn't go and hit my limit order, yeah, I don't buy the shares, but I don't get paid for waiting, right? Time is money. So instead of doing limit order, you could also do sell a put. If a stock doesn't hit and go below your strike price, yeah, we at least got paid for waiting, right? So start here. Other strategies are a little more advanced. You can do a put spread, you can do a strangles, you can do iron condor. There are many strategies, but this is the basic one. And then we talked about second basic call option, and then, yeah, so 10th recording, I'll upload it today. Those who attended it and you're waiting for it, yeah, I know. I was a little busy. We met a few person in real life, so didn't get time to upload it yesterday, but I'll upload the recording for drill number 10 today, so you should have that. All right. Any other question? Does bonds also have similar risk of crashing if federal interest rates is reduced? So if the interest rates and the bond prices will move in opposite direction. So let's say if Fed reduce the interest rates, then the bond prices of, let's say, TLT, the bond prices will go, the TLT will go higher. Okay. So and today, if you look at where the TLT is and why it is where it is because, oh, sorry, if you want a link, I can give you the link to the website. If anyone interested in, just register for free, and then you can go to members and say boot camp. So that's where you will get access to all the recordings of the boot camp. Okay, coming back to, let's look at TLT. So why this 20-year TLT has been in downtrend? It is because Fed had started to increase the interest rates. So when Fed increase the interest rates, the prices of the existing bonds, they start to go down. So it's like a reverse relationship. Longer the duration of bonds, more the impact. So you see TLT is like, and I've been trading TLT since 2017, 2018, right? 130s, 150, 160s. The time is down to 92 because Fed has increased the interest rates. So if Fed starts to reduce it, you should see these bonds start to perform. How about tips? I've not dealt with tips, really. So I have no experience. I mean, these are basically the base premise of the tips is that you will get a return which is over and above the inflation return. So if you buy a tip, it'll tell you whatever, like 0.5. I don't know how much basis points do they provide you return. Let's say if they say 1%, it means it is 1% above inflation. So you have a guaranteed that you're beating inflation. That is why it is called inflation protection securities. What are the tips? What is it called? It's Treasury inflation
protection security, yeah.
Securities. Yeah, I never bought it. Yeah, protected securities. But the idea is, if you have, let's say, you have no other source of income, you're retired, you just want to make sure that inflation doesn't, eat up your portfolio. Yeah, go for a tips.
I mean, a little bit of diversification, tips and TLT out of our other high beta portfolio.
Sorry, say that again, Jay.
Some diversification with the TLT and tips, right? Because we need little exposure to those areas which can give us a little bit better and be conservative there.
Yeah, I mean, there are others, like, so I think SGov is a T-bill ETF. There are many bond ETFs. If you just Google for bond ETFs, there are high yield bond ETFs. You'll get a bunch of list of bond ETFs. Come on. Let's go. What does the US money says? So this is the total bond ETF, treasury bond ETF. Like it's giving 4.6%. Like Vanguard BND is giving 5.1%. Right? So BSV, this is the short-term bond ETF, long-term bond. So depending on your duration, like I said, I prefer because TLT is got a good option play in that. I mean, I can, let's say BND, that's a Vanguard, right? So look at, I mean, almost no volume. To look at, let's say SGov. Let me see SGov, which is a short term. Come on, SGOV. It doesn't even have an options. So look at TLT. It's pretty okay. So I'm on a paper trading, so that's why probably it doesn't show volume, but it's a pretty optionable, and it's got a not too bad a bid ask spread. I mean, it's a decent one. So that is why I prefer TLT. Meme stocks, ANC, Chewy, something changed for these. Yeah. So there is some stuff going between Kitty and the Ryan Cohen. So Ryan Cohen, again, that's a speculation, right? Ryan Cohen is pumping up GME. Roaring Kitty will go and buy Chewy stocks, and then the Chewy stock will jump. That's all is happening. Yeah, I don't follow. I don't know what else is going on, but it's I would caution to stay away from these things, because majority of the folks are become just bag holders in these cases. Right? That's not how you can actually build nice, good, balanced portfolio, which will work out for long term. So I don't pay attention. I mean, it does come up in the news. I don't know why CNBCs and the Bloombergs of the world will give so much of a airtime to what Kitty is doing, because Kitty has got a millions of followers, and then they move a particular stock. I guess that's what, but I don't care. DODGX, yeah, sensation. Yeah, whatever keep people glued to watching the media, financial media, that's what they will sell.
Exciting news. It's Roaring Kitty is exciting news, actually. But you might lose a shirt. Yeah.
But I'm happy that it has brought in a lot more people into the market. But what I hope is those people, after burning their money, I hope that they stay and realize the mistake and correct it. The worst outcome would be they will say, oh, stock market is like, it's a gamble, I'm not coming back. Well, that will be the worst situation. But yeah, it's a democracy. People have a right to do what they want to do with their money. I'm no one to tell that you should not buy out of the money GME calls. It's their money. DODGS Oakmark funds, no, I don't have any exposure to these funds. Generally, they have a higher expense ratio. Number two is, again, I have no way to reduce the cost basis, right? So I want to stick to either individual stocks or ETFs, and use options to reduce the cost basis. But I'm a big fan of Oakmark, Sierra. Howard Marks, one of the greatest thinker on risk, managing risk. I think I've read 2 or 3 books of Howard Marks.
Wow. So how do you get exposure to, like, let's say, overseas markets, especially with the dollar being so strong? I mean, we don't want to invest individually, right? So funds might be a better way to go.
So which overseas market you want? You want Japan?
Say Japan right now, Japan.
So Japan, it was what, last year I talked about in, I think, June, almost a year ago, when I said, when Japanese stock exchanges try to put a pseudo rule, I'm like, hey, the market looks good. And I took an exposure through EWJ. So this is the ETF.
Yep.
So there are many ETFs which are country-specific ETFs, right? EWZ, I think, is Mexico. That's Brazil, I guess. EWW is Mexico. You want India, you got INDA. There are many other India-based funds. I'm just giving you one. So depending on which country you want, China, get a large cap FXI. You want China internet companies. I don't know whether it's a Pinduoduo, whether it's other internet company which will perform. This is the KWeb is a China internet ETF. So we have ETFs for almost everyone. I'm like, yeah, I'm good with this. But that's nothing to say that Oakmark funds are not great. I mean, they are some good investors, but remember, Oakmark is mostly distressed investor. So their investing strategy is different. They're trying to look for and they are mostly what you call as the credit investors, right? Not doing the equity, but they believe mostly providing a credit, because creditors, company goes bankrupt, you are the first one in line. So they are not most on the equity side, they are more on the credit side of the house. If you want that exposure of a credit market, yeah, oak market may be a good thing. I'm not looking for that. All right. Yeah, great discussion. Good questions. Thank you. So let's yeah, if you have few more, let me know. Otherwise, I'll start what I had planned for today. How do you balance investing between value investing in stocks like Amazon? Amazon is a value investing for me. So I don't subscribe to the fact that value investing means low PE or low valuation multiples. From my perspective, value investing is, if I'm putting in $100, can I expect it to return me more than $100 after 10 years? For me, that is value investing. That's my definition of value investing. Right.
So because I've been watching Amazon for years now, right? And apart from one or two instances, it's just constantly at an all-time high, except 2022 or similarly with Apple. And you just watch these. So how do you sort of drive any level of conviction within yourself saying, it's still a sensible approach buying this thing at an all-time high? I'm being rational here by doing this thing.
I agree with you. I had such a hard time when I first bought Amazon. So I saw Amazon, it was like a pre-split. I think when I started like looking individual stocks, it was trading at 500 or 600, maybe $250, like right after the big crash and all that. I'm like, oh, it's expensive. Saw it going for 500, 600. Oh, it's becoming more expensive. Eventually, I bought it at $1,600. And I was like, and because then I started looking into Amazon, and that's why it is important to spend your own time in reading through the annual report or what the business is doing. That's the only way you can build your conviction. I had heard about Amazon, that you can, because I was using Amazon, I have heard about people talking about Amazon on YouTube or on financial media, but I never could get an exposure until I read like some of the annual letter from Jeff Bezos, and then I started looking what businesses they are in. Then I built my conviction, and I eventually bought at 1,600. Right. Nice. Then it went to 3,000. Then it came back down. So now I think post split, and then I started selling options against that and all that stuff. Good companies, great businesses are rarely available at traditionally called value band, right? Hey, if the PE is less than 10, or I don't want to pay more than 1.2 of a book value, right? Price to book value. You will never find these. And I think book value is a relevant concept when it comes to a lot of software companies. So even if you look at a PE, you will never find these great companies. Let me not say never. There will be rare instances only where you will find these companies are actually trading at sensible valuation from a traditional valuation metrics perspective. So then how do we make a decision? I want to go deeper and try to understand what the heck these companies do. Yeah. And then when I see that it does make sense to me in terms of, hey, it is not only one business. They have a lot of optionality.
Yeah.
They have a big moat that they built around. Amazon was investing in 2014, 2015, spending a lot of money because they wanted to build their own delivery infrastructure. Because they wanted to move from two-day delivery to one-day delivery. And they continue to invest in to move from, in the same day delivery. So, and then you see, it's a disrupted multiple industries. Yeah. So that's how I will build conviction is I need to go and understand the business. If I don't understand the business, then I say, okay, I'll pick ETF.
Yeah. As I talk to you, I've got the 10K in my hand and I've read through it and I'm very impressed by it. But I guess just resistance I have to come over.
Yeah.
Yeah, because the AWS business is amazing, and it's the more profitable bit with AI coming in and all sorts of things. But it's yeah, I just numerically I found it hard to justify if I have to spend, something like $70 or $80 to make $1 on this thing. How do I know I'm not in a gambling
Yeah, so
setting?
that is, yeah, if you look at the PE, that is what it'll tell you, right?
Yeah,
Like how you have to spend. I mean, this is what your earnings would be.
yeah.
But these companies grow into these valuations. And I'm completely with you. I had a tough time. And especially if you have not bought it at 250, you have not bought it at 600, you have not bought it at 1,000, it becomes even more difficult because now I'm telling you, dude, I was stupid. I let it go. But then you have to, like let go that ego and say, no, it's a great business. And that is the first time then I bought it at 1,600. I'm like, no, let me buy this now. And
Yeah.
happen with, pick any grade, especially growing, and especially when it comes to the software. Okay, the reason, and now I'm getting little bit into the accounting stuff. I'm not an accountant, so I could be a little wrong, but when it comes to the software, the reason why the earnings are depressed is how the accounting works. Let me give an example. Let's say if I were building a big shipbuilding plant or a steel plant, what do I need to to start producing steel ingots or whatever, the steel bills or steel bars? I need to build factories. I need to get in machines. So a lot of a capital expenditure I need to do before I can even start to get a first output, right? But what accounting allows you to do, they will tell you, oh, you spend, let's say, $50 billion in building this plant. You don't have to take all the expense of $50 billion in 1 year. This is the capex, so you can depreciate over a long period of time, right? So
Yeah.
I'm on my earnings statement. Let's say I depreciate whatever, like 6-7 years. I don't know. The accountant will know, right? Let's say it's a 6 years, 7 years. I know computers is like 3 to 5 years. I don't know about the other assets. Take 10 years. So every year I'm gonna get an expense only of $5 billion on my profit and loss statement, right?
Yeah.
Flip it. Let's say I am Facebook. Before I can make money, I need to build so much. I need to create and spend a lot in building the infrastructure. I need to buy server capacities. I need to invest in AI models. I need to train my AI model. Training an AI model itself is now they're talking about 100 to 10 to $100 billion, right? So I need to invest in building the software. So when I build in software, my R&D expenses, what does accounting allow you to do? You can't capitalize it. And when it comes to the software companies, the majority of the big chunk of their expenses is R&D. That gets into paying salaries for the most expensive AI engineers, but you can't amortize it. So you get hit with all the expense right when you're starting your business. That is why you would see majority the software companies will have a low earnings, high PE ratios, because you can't amortize the expense as if you were a big capex old economy company and you would have bought machines, you would have been able to amortize. So I guess accounting FASB need to understand that paying engineers is equivalent to buying machines. And software companies should not have to take a full charge in the same year, in the same quarter in which they have made the expense. They should be able to amortize it over a longer period of time. Then you can compare the valuation methods of old days of PE to the software company. So that is why I don't pay too much attention on the PE when it comes to the software company, because building software is like, or paying engineers is like you buying machines.
Yeah.
But you can't you can't depreciate your RAM, and that's the reason.
Thank you for sharing that. Thank you. So today it's at $200, right? Amazon, after all the splits and everything.
Yep.
So Yeah, just your gut feel take on it. Is it a sensible price for if someone was going to hold it for next 10 years or something?
Yeah, 10 years, I think it's a good price. Always do DCA. Now, will it go down 10-20% this year? Maybe.
Yeah.
Right. That's always assume that will happen. That is why, I mean, that's why one reason why I focus on, hey, reduce your risk so that you can stay invested for long. And that's why use options. You
Yeah.
never know, it could go down 10% tomorrow. But for next 10 years, yeah, the business is still being, kicking. I mean, they're entering into new and newer markets.
Yeah. Yeah.
But what can happen in next 10 months, I have no idea.
Yeah. Yeah. Well, I just got something. Well, they're into this whole pharmacy thing now, so I'm probably moving my pharmacy from CVS to Amazon very soon. But yeah, you mentioned DCA, so I know.
Sorry, DCA means dollar cost average.
Okay,
So
yeah,
that's
yeah.
one.
I understand dollar cost.
Yeah.
Yeah. Cool.
And that's like the best part, right? Because you don't need to time the market, just do DCAs.
Yeah. Thank you.
Yeah, so I'm looking at my Amazon, right? So my average stock buy price is $146. So $200, yeah, a good return. But cost and option premium, I've collected $27. So my cost basis is $119. That I really love it. So now if Amazon fall down by 10-20%, yeah, I'm hurt, yeah, but it's still much better because that's where you use options to reduce your risk.
So basically, you're doing cash secured put on stocks that you like just to get paid while you wait and you kind of get inside.
Yeah, I've been doing all kinds of option strategies, right? So I guess
like, I mean, right now, I feel Apple has gone up a little bit too high. I don't want to put new monies to that. Or you do a similar DCA strategy for Apple as well?
Yeah, so I think I do post it. I think at last 30 days or all ones, you can go and see it. Let's say May, what I did on 1st May. Let's look at Jumia covered call near 30 delta to gain premium, expect covered call, short call to reduce deltas, covered call, slightly bearish strangle, Amazon. This is my June iron condor, right? I just talked about iron condor. I've also available on for August as well. So this was my June iron condor, right? Nice premium, $10 risk, $3, 3.39 premium. If it falls below 170, I get an opportunity to buy. It goes above 195, maybe I can sell a little bit. Right? So yeah, I do all kind of but all selling, because you keep collecting premium, reduce your cost basis. I don't buy options. Let's look at June 3rd. What I did on June 3rd. Iron condor on Microsoft, STNE, this will be covered call. Apple, rolled up my puts, covered call. June closed, open July. Tesla had closed June for unbalanced iron condor. Again, iron condor. Pins, what I did, had closed strangle for profit, now opening short put and a call spread, because I own pins, but I don't want it to be called away. So all that stuff. I want to invest in Apple. What do you think? I don't know. I mean, I don't know if Apple is good for you or not, but I'm going to hold my Apple. Again, you first need to understand yourself before you start to understand which stocks you want to pick in. Over years, that's what I found out, that knowing yourself as an investor is way more important than finding what stock you should get in. So Apple is good for me. But if you look at it, their sales have been going down, but I think they generate tons of cash.
Yeah.
Apple generate like $100 billion free cash flow per year.
Yeah.
So I'm not going to bet against Apple.
I want to share a little story there as well. So I think 2014, I started making apps for Apple. And I spent just thousands of dollars making those apps, and they made money. They made money.
Yeah.
But in the end, I figured if I didn't just invested those thousands of dollars in the stock and not done any work,
Yeah.
I would have probably ended up making more money.
That's true. That's true. And I know that I still, and when it comes to the AI, I guess the incumbents are still have much bigger advantage over others. Apple and the Googles, they got a huge distribution. So I'm not going to write them off. I know there are like people are saying, oh, Perplexity will kill Google. I mean, not so soon. All right, let's get back to, so today I wanted to talk about, give you a primer on a miracle drugs. That's taken the market into a huge, crazy, I would say, a crazy spin around weight loss drugs. So want to spend some time on that. Yeah, some charts for you. And of course, we'll look at overall market in terms of what happened. So yeah, before that, I don't know, the others who were active in options, let me know what happened, because I don't recall getting so lucky on any option trade. I know, Fred, you are very active. So this is what happened. On 1st of July, I sold $20 white iron condor, got close to $7 in premium. And on 2nd of July, that had decayed to 2.57. I'm like, what happened? It's not that Meta had run up too high, because stock didn't move much. Stock was at 500 when I opened it. On the next day, it was 504. So stock didn't move much. Vol didn't crush. So IV was 39 when I opened it. IV is 39 when I closed it. And it's not much of a theta decay because it's just one day. I have no idea what happened. But I'm like, I don't want to let it go. Let me just pocket that profit. I don't recall any other trade where I suddenly got lucky. So I don't know what was the mispricing. I've never seen this before. I would say it was maybe my just plain dumb luck that, for whatever reason, why I was able to sell it at $7. And then I don't know. I at least it didn't reflect to be in Delta or IV or yeah, or in Theta, because there's no way. So I don't know what happened. If anyone else can opine on this one and enlighten me, what are could be some other case in which this thing could have happened, that will help me. But I'm not come across, especially, it Meta like a very heavily traded instrument, right? It's not a penny stock that someone can just pump and dump. So absolutely no idea why. I guess it was just dumb luck. Okay. So other interesting one was Steve Ballmer net worth surpasses Bill Gates after that Microsoft's recent run up. So the lot of a chatter on Twitter around they basically calling Bill Gates saying, hey, you stupid, you diversified. Steve Ballmer, he had Microsoft shares, he just kept 100% of those shares. I mean, he never diversified. So I don't know. You guys decide what you want to do. I don't want to, dunk on Bill Gates, because for every Steve Ballmer, there are probably 100 Jack Ma's or Masayoshi Son who had all this concentrated, all of their net worth in one stock, and that stock just tanked. So
a basketball team.
Yeah. So Steve Ballmer has bought a basketball team, right? Or is it a basketball team or is it a football team? He has
No, he has the Clippers, I think, the LA Clippers. Yeah.
So So I know there are two schools of thought which says, hey, you should concentrate, because that's how Steve Ballmer has been able to beat Bill Gates. So Bill Gates, they're saying Bill Gates was friend with Warren Buffett. He says you should diversify and see what the diversification has done for him. I have my own opinion, which is I don't think I would do what Steve Ballmer has done, because hey, it is because he had Microsoft, and he did not have, IBM. What if it was an IBM CEO? No one talks about that. Like, there are more examples of companies getting in oblivion than maybe a few wherein people have made insane amount of wealth. So this is what I say: to make insane amount of wealth, concentrate. To incinerate insane amount of wealth, concentrate. To retain wealth, diversify.
Who was that guy? Shark Tank guy? He's like 1.4 billion he saved with Yahoo stock. Who's that guy?
Shark Tank on Yahoo.
Mark Cuban?
Mark Cuban, yeah.
Mark Cuban, he sold his company, right, to Yahoo.
Yahoo, but again, he sold that. He had some protective put for Yahoo stock, which saved his bacon. Actually, that was
okay.
The 1.4 billion actually.
Yeah. Yeah, she said you are smart looking back. Yeah, now right now, yeah, Steve Ballmer looks smart. Right? But I don't subscribe to this. I'm like, if you want to retain, most of the time, you better diversify. All right. So we already looked at the markets, how markets have been doing. Information technology up 32% and up 30%. So basically, tech is driving the markets. And that's lifting the overall S&P to almost 16%, S&P 500 to 16% year to date, which is what we are halfway through, right? And 16% halfway, take it anytime, man. And this is where if you have been waiting for a crash, because some of the pundits on the markets have been talking about an impending crash, I think it's Peter Lynch who has said, more money has been lost in waiting for a crash than in the crash. Right? I would say that more money has not been made because that's opportunity cost, because you were waiting for the crash. So, and another news. So the last bear on the street has now capitulated. So this is again the top strategies, global market strategies from JP Morgan. Marco, he's now left JP Morgan, or maybe he's been basically asked to go JP Morgan, because he has been consistently bear throughout 2024, I guess also in 2023, and the markets have been ripping high. So JP Morgan's end-year prediction is 4,200. And that is because he is the chief global market strategist and a co-head of global research. So whatever he has to approve, and he has been bear on the market. And now JP Morgan looks stupid with this target, and their customers, the big high net worth customers, will be questioning them, why do I keep my money with JP Morgan if you're not investing in the markets, and the markets have been up like 16% for the year? And my neighbors are getting rich. My golf club friends are getting rich. And I'm invested in JP Morgan. And you guys are telling me that S&P is going to crash to 4,200. So you're holding cash. So
he may be right one of the days.
Yeah. So none of the other major firms has less than 5,200. So now he's out. Someone else has moved in. I won't be surprised if JP Morgan comes and revise its target for S&P 500. Because otherwise they look stupid. So earlier this year, we also saw Mike Wilson of Morgan Stanley went through a similar stuff. He was removed from his Globe Chief Strategist post. And then, I think Morgan Stanley updated their end of year target. So that's why the lesson is predicting market is short term, it's not just tough, it is impossible. Now, these were Mike Wilson was awarded the best analyst of 2022 because he accurately predicted that the market will crash in 2022. He was kind of a worshipped on Wall Street. He lost all this credibility in 2023 because he remained bearish in 2023. Marco, he rose to prominence because he predicted that after COVID-19, market will rebound. Once in a while, everyone's predictions will come true. And that is why I don't believe in predictions. If you ask me where is Apple going to go in 1 year, I have no idea. Neither has anyone else in the market. Everyone can throw some guesses. Some will be right, some will be wrong. But if you go back and look at some of the history books and see, what happened in those 1960s, Nifty 50s, where everything was going up. One signal that you can gather from going through those days is when the most bearish analyst or the most bearish investor capitulates, we are actually close to the top. So now I'm thinking, Mike Wilson is gone, Marco is gone, everyone is now bullish. That is probably, maybe we are overextended. I'm not predicting anything. I don't know what's going to happen. But then when everyone moves on to the one side of the market will teach a lesson. It has done it multiple times. Right? So, but I saw, okay, the last bear is capitulating. Right? I learned something new. Sahm, I don't know how do you pronounce it. I'll call it Sahm, recession indicator. So till now, before today, all I say before yesterday, because I learned about it yesterday, there was only one, decently indicator to predict recession was yield curve inversion, right? We have talked about yield curve. It's not actually during inversion when it starts to uninvert, right? So that's where, if you go and look at the previous recessions and see what yield curve was doing, that's like a fairly good indicator of whatever of the indicators that we know of for recession. But yesterday I learned about something new. And this basically says that the start of recession will happen when the 3-month average, moving average of the national unemployment rises by 50 basis points or more relative to the minimum of 3-month averages from past 12 months. So this basically looks at the unemployment rate. Yield curve looks at your 10-year and 2-year. But this one looks at unemployment number to predict recessions. So I asked ChatGPT. No, this is not ChatGPT. I think this is Copilot. I asked Copilot to give me a list of all the recessions that have happened since 1950. Right. So Copilot gave with this. So then I went to this, look at the Sahm indicator. Let's bring that up here. Okay. And then I started looking at, okay, what does this tell me? Is it really good? Let's compare with what it shows whether we have a chance of recession or not. So it doesn't have data from 1915. So 1957, 58, which is like, okay, so 1960, 61, this is where we had this gray band recession, right? This went up 0.5. 1969, 70, I guess is this one, where it is more than moved up on 0.5. 1973, 75, it will be this one. 80, 81, sorry, 1980, 81, 82, 1990, 91, 2001, 2007, 2009, 2020. I'm like, damn, it is again, this is hindsight, right? Things that have worked for 50 years may or may not work, but I'm like, okay, this is much better. Historically, it has performed much better in terms of telling us if it goes above 0.5, there may be a chance for recession. Let me see if it does it give a negative signals. Has it gone above 0.5 and we did not have recession? So, which is this one, 0.33, right? So, which is this one? 0.43. 0.43. This is going down. 0.33. I'm just trying to see, is there been a negative signal? No. So now the bigger question is, it is starting to rise up. So this is currently, it is a 0.4. I'm not predicting recession, but something I learned, I thought I'll share. To me, looking at past, 10 recessions, 11 recessions, looks to be this indicator has done a decent job. So something new I learned, I thought I'll share. You make your own decision based on, whatever your belief is, but to me, it looks like it has done a decent job. What else? Russell 2000 had this rebalancing, and this last week we talked about, and I shared with you why I am thinking to move away from IWM, because the moment company in the stock become bigger, the Russell will take them out of their 2000, and this is what exactly happened. Supermicro, I think this is the best performing stock in the market for 2024. Right, they've taken it out. Abercrombie Fitch, again, had a huge run up in the markets this year. Abercrombie Fitch is what, A and F, right? Is up 88%. And now it got punished. It is out. SMCI is how much? 200% year to date. Now it is out. So, I don't know. I mean, I hold IWM. It's one of my top 10 positions. But again, so rebalancing had happened. So if, let's say, SMCI goes to the moon, that will not gonna impact IWM. I see some comments say, why stock pickers are doing badly as stocks soar? Yeah, I think we talked about it. So if you are not in NVIDIA or a few selected stocks, it is impossible to beat the market. And that is why active managers have a really very tough time. I think last week we looked at the graph, right? Where we looked at stock market concentration. When the stock market concentration is high, it is very difficult time for active managers, for stock pickers. So, but thanks for sharing the link. Maybe I'll go and read this, what WSJ has to say. CNN estimated Balmer was set to collect $1 billion from Microsoft. Yeah, people say, hey, what does Warren Buffett know about investing? And he sits and collect like $900 million from Coke investment without moving a finger. And
that was dividends.
Sorry, yeah, I don't whatever. I mean, Warren Buffett collects a few $1 billion just in dividends. All right, a quick glance at crypto. It is firmly in the grip of bear. If you look at CoinGecko, right? Okay, it has recovered a bit, but it's like down 5% in the week, down 10%. So bear is eating the crypto market. It fell for fourth consecutive trading session. It is down below 5,300. I didn't see anything fundamental changing in here, but the reasons were what we talked about last week. US government selling a bunch of crypto, German selling $5 or $3 billion worth of crypto, And then the biggest one is the Mount Gox. They are returning $8 billion to those who have been waiting for, their coins to be returned. So that's and many of them will actually end up selling it. So that's why there was you should say, the selling pressure. And then the miners also had to sell because when this goes down, the miners' revenue also goes down, and then they had to also sell some. So selling pressure suddenly coming in, so Bitcoin was below 54K. So I made use of this opportunity. So what else on? Yeah, so it was below. Again, now this breaches the technical stuff, which is it's fell through its 200-day moving average. Should you be concerned about that now? It's below 200-day moving average. I mean, Bitcoin is still up nicely for year to date, right? BTC is a futures. Futures is like up 24%. I think even on the spot side, do I have 1 year? Doesn't have 1 year. But I guess it's let's take a proxy of Bitcoin. Now we have these ETFs, right? So but it didn't start trading on day one. So we don't have 1st January data. But I guess Bitcoin is up like whatever, 30-40%. So not a big deal. Then what I am still waiting for is, so we had these liquidations. I'm waiting for Ethereum ETF approval. Market thinks that it might get approved next week. And the ETF could get approved next week and could start to trade next week, or maybe a week after that. But it is anybody's guess. I don't think we'll have a pushback from SEC because they already approved the 19.4B filing a few weeks ago. So now it is just the question of going through basically the process of getting it listed. I don't think there is any regulatory concern around approval. So we'll see what happens once Ethereum ETFs gets approved. And now we're also seeing someone filing Solanas, right? So DGens are back. They're filing Solanas now. So this is where we're. Cyrus asks, what do you think of selling calls on crypto? So there are a Deribit exchange where you can sell it. No US regulated exchange. You can't sell options on crypto exchanges. I think Deribit you can, but I don't think Deribit is US based. But anyway, the market is really bad. The spread is really wide. The pricing is off. So what many people do is do a proxy of selling call against the miners, Riots, Marathon Digital, or like Microsoft strategy, which has become a proxy for Bitcoin. So, or Coinbase, who derives most all revenue from crypto. So those are the proxies of crypto economy. Those shares of those companies trade on US exchanges. You can go and sell calls against it. But remember, you may not have, it's not 100% correlated, but you have a high correlation, right? But then you also have a individual company related risk. So that you can do. So I don't sell calls on crypto, but in my past, have I sold calls on Riots? Yeah, I've done on Riot. Maybe I've done on Mara. I think right now I have an Iron Condor on MSTR. So that's my option play when it comes to crypto. Aditya says, is there a way to get physical copies of 10K for free? I have no idea. Well, do you want physical copy? And I'm much happy getting a PDF and reading PDF on my iPad.
I already spend like 12 hours in front of my multiple screens every day.
Yeah, okay.
I'm just wondering if there's a better way.
No.
Yeah,
if you find something, do let me know.
Yeah.
I haven't even tried.
I found one company, and I'll share the link. they sent me a few, but yeah, I'll share something that I found, but
Sure. Thank you.
not. Yeah.
So what did I buy or sell this week? I picked up FBTC on Friday because, like I said, I don't think anything fundamentally changed in the thesis of Bitcoin. So market had punished it on Friday. I think it was like 54K. So I picked up some FBTC. And not a recommendation, especially for the who is new here. I just want to share because I want to be transparent. So that's the only stock I bought last week. Anyone else want to share anything you bought new? Or any other exciting stock that you are happy to buy last week? Yep. All right, let's move on. Snowflake. So if you are an investor in Snowflake, Snowflake have had some issues lately. I don't know how to put it. Was it a Snowflake issue? Probably not. But how we came to know that what's happening with Snowflake is a lot of now, because SEC has made it mandatory that if you had a data breach, if you have a security exposure, if you get hacked, and it is material, now they leave it up to the company to decide what is material impact. And if that hack has a material impact, you have to disclose it to public through an SEC filing, I think within 3 or 4 days, whatever it is. So now we figured out that a lot of companies, some big companies that we are aware of, LendingTree, Ticketmaster, Santander Bank, City of Cleveland, Neiman Marcus, LA, Advanced Auto Parts, many of them trade publicly on the, so they filed that their data was breached.
Hey, locally, there was on the credit union also, they had a data breach. I think it's Patelco.
Patelco had a data breach.
Yeah.
And I think today morning on my Google homepage, it was showing me, I think some pharmacy or someone else who had a breach. So nowadays we don't even pay attention, right? Those are like, yeah, it keeps happening. So
Unless you're a hacker on the black bad world out there looking to buy data, I saw an ad on the TV that this guy is on a train and they're just hacking data. What is that? It's pretty
oh my
interesting.
God. Yeah, this has become I guess, cost of doing, for us, there's the cost of sharing our data. So what happened especially for these companies, and then I think the market said that overall, maybe close to 165 customers have been estimated that their data was breached. And one common thread that those like cyber sleuths, armchair detectives on Twitter, they found out that they all had the data on Snowflake. So that's how it started saying, oh my God, Snowflake got hacked, right? But it was not that Snowflake got hacked. What happened was so when you log into your Snowflake account on Snowflake Cloud, the administrators, they had not set up multi-factor authentication, right? So it's only username and password. Nowadays, like almost every financial like even my mortgage, the company, they have a multi-factor authentication. I can't log into my mortgage website without giving that like OTP code, or they'll send a code in an email, and then I have to put in that code apart from username and password. There's one more layer of authentication. So, but Snowflake does not mandate it for their customers. So some of these customers, they were happy with their username and passwords. And the folks over there got social engineered. The hackers stole their username and password, and then they logged into the Snowflake account and they started extracting the data. All that is fine. I mean, it's not fine, but the problem that happens is the question that now the Snowflake business model is that they charge their customers based on the data that is extracted out or goes in, right? How much of or on the consumption of the resources. So now if you're running queries to extract the data out of Snowflake, like hackers have been extracting millions and millions of records, They have been extracting the data out of the Snowflake. The Snowflake is actually earning more revenue from those customers. So that is like you're getting a share in the loot, right? So the whole data extraction process from a Snowflake perspective is good. So in no way I'm implying that Snowflake didn't tell, etc., right? But the question that which is being asked is, when Snowflake monitors the system and they realize that there have been an unusual activity of data extraction, should they have not notified their customers saying, hey guys, are you doing something? I'm not seeing you doing this kind of a data extraction for however long you have been with us. Is there something, are you guys okay? Just do a pulse check. The question is, if your revenue is dependent of that activity being continued, it may not be illegal, but is it not unethical to not reach out to your customer and say, hey, can you look, is it like the data that you're extracting, is it like really legit? It's like, I think it's Netflix. They realize many people have had the subscription, probably forgot about it, never logged in. It's not illegal for them to continue to charge it, but I think they did the right thing and reach out to say, hey, we haven't seen you logging in, maybe you want to cancel it. So now then there is a whole timeline. It started to happen on April 14th. They hired Mandiant. I think Mandiant is now part of, who bought Mandiant? McAfee? I don't know. In any case, so Mandiant is a company which does, post-hack detective work, figure out are the hackers are still there or not, and basically help protect, contain the damage. So Mandiant came in, they notified Snowflake, and then they have to notify law enforcement agencies saying, hey, this is what happened. Multiple customers have been impacted. That happened on May 22nd. May 22nd, CEO and the CFO went for the earnings call. They did not say anything about it. Now, if you are a tinfoil a person saying they should have disclosed, I don't blame them, because they may not have yet determined that it was a material impact on the business or not. Right? But it is true that the CEO and the CFO knew about it in May, right? And they didn't disclose any of this like hack until June 2nd. And May 22nd was when they actually gave an earnings call. Right? So the concerns that we had Snowflake is that they didn't reach out to, Snowflake did say that once we figured out that there's been a hack on June 2nd, we reached out to our customers. Basically, whichever the support name they have in the contract, they reach out to them. But folks on Twitter are saying why they didn't reach out to the project sponsors, why they didn't reach out to the higher people. I don't think that's how the companies work. Company will reach out to the person who is mentioned as a contact person in your support contract. And I think Snowflake did the right job. But a bigger concern was after this hack was figured out, not yet disclosed, chief accounting officer and some senior execs sold their shares. And I don't think they are kind of like so-called officers in SEC parlance, so they don't have to comply with, I don't know, maybe they were, maybe it was already 105B plan. But there are some concerns on, senior execs selling their shares. So the impact was, if they continue let the hack continue because it helps in the revenue, that is really bad. The worst situation will be if Snowflake has to come back and restate the revenue, because now they figured out bunch of the revenue was, came from illegal activity. So a little bit of an ethical question on if you find that a thief or a robber has dropped $100 in your piggy bank, should you consider it as your income once you realize that this was a part of a robbery loot? That's a question I have with Snowflake is, are you going to restate your revenue? Because now you know a bunch of revenue that you had gotten in your, you have declared in your books came from, the loot perpetrated by these hackers. That's a bigger question. Question number 2 is, will customers move away from Snowflake, even though it is not that the Snowflake got hacked, it's their customers who did not implement multi-factor authentication, additional layer of authentication, their account got hacked. Right? And it is not an industry standard. I was surprised when I started looking into it. I looked into AWS. They also do not make it mandatory. After the Snowflake hack was reported, now AWS has made it mandatory. They'll make it mandatory, I think, from July onwards. For certain work, accounts, you have to have multiple layers of authentication. So this is what happened with Snowflake. I don't own any shares of Snowflake. It was a darling of stock market when it came IPO right out of the gate. And since then, the stock has been around at multiple places. Right? The highest was what, 400 plus, now 143. I'm not really sure. I mean, I've not done a deep dive, except the IPO review. Beyond that, I've not done a deep dive on should I want to invest in Snowflake or not. Right? What's a mode of Snowflake? We have a Snowflake, we have a Databricks, we have a MongoDB. But if you are interested in Snowflake, just keep that they had a pretty a bad PR that they had to handle because of these hacks. So that's on Snowflake. Let's see some comments. Have you seen the CRMs, Matthew McConaughey and Wild AI? One thing I know is this Salesforce AI Einstein, right? They call this Einstein. It's on my. They're spending a lot of money on a podcast, on advertising in a podcast. I mean, I listen to a lot of podcasts, and I will hear this Einstein AI. To me, it looks like pretty cringy, yeah. But I guess that's what happened when everything is so bubblicious. Everyone is talking about AI, but I have not seen the ad. So, but I'll look into this one. So that's Snowflake. Any questions on Snowflake? Any shareholders of Snowflake here? Anyone own? Okay, so now Sachin says yes. So you have one data point. I'm not saying buy or sell or anything, but I don't think that this was a concern. My only concern would be the restatement of a revenue, because now they know a bunch of our revenue came from illegal activity. Other than that, I don't blame Snowflake for what happened.
So Vivek, hi, it's Maritza. Can you hear me?
Yeah, I can hear you. Yeah.
So I can actually thank you for the fact that I don't own Snowflake. My sister, before I started coming to these Saturday sessions, my sister was like, "Oh, you should buy Snowflake. She's into stocks." And this was before I even started. And so then I had just started learning about options. So I sold a naked put. Mm-hmm. It was around 225. So I sold a naked put like at 185. Mm-hmm. Thinking, hey, if it never hits it, fine. But if it does, I'm happy owning it, because again, my sister was like, yeah, you should own it. It's great, blah, blah, blah. So then earnings came out and during one of these deep dive sessions on Saturday, and it started coming down towards the 185. And I was like, well, I'm happy to own it because that was the point anyway. But then during one of these Saturday sessions, you did a deep dive on Snowflake and started really going into the fact that they're just giving a ton of stock options out to that's just really bad under the hood. So I was like, oh my gosh, I don't want to own this. So I actually got out of it right like around I got out of the naked put like around, I don't know, 188 or something. And I had to pay to get out of it.
You took some loss, but that's
yeah, but I was so happy that I did it. I'm so happy that I did, because otherwise I'd be literally stuck holding this until it's down now at 140 something. Yeah. So anyways, it pays to come to educational things like this. So thank you.
Oh, you're welcome. At least now we have one person who has benefited from the session. That's a motivation.
Yeah. Yeah.
So, okay, Ramesh says the name Flakes taught me from investing. Oh, that's great. But yeah, I mean, there was and I remember, I think this was Sridhar Ramaswamy, he bought $5 million and then the market was, oh, he's buying $5 million worth. I think that's what I said, hey, look under the cover. It was in his employment contract that he has to buy. So it's not that he really loves it. It's a contractual obligation. And Snowflake paid him, in other form to buy this. Anyway. So I'm not dissing this company. I just haven't got very excited about the company business and what kind of mode it may have. Maybe I have to spend some time. All right, let's get into the GLP. The other Christian I benefited too. Thank you. You're welcome. Let's talk about GLP-1s, which has taken the whole, I'd say, the weight loss industry by storm. And I don't care what's happening in the weight loss industry, but what I do care is what's happening here, right? A 54% Eli Lilly, pharma company, it was like $450 not too long ago, August 23. Now, less than a year, it is up 100%. Right? So what's been driving all this craziness? You would have heard the terms GLP-1, Ozempic, Wegovy, and Mounjaro. So we'll spend next 15 minutes or so, 15-20 minutes, to give you background on what's happening in this industry, who are the players, what's the current status, so that if you want to invest in it, invest judiciously. All right, so let's start with the GLP-1 primer. Let me search, where's my document of GLP-1 is, I don't have it open. Oh. Hold on, while I search for the document, it must be in the history, weight loss drugs. All right, and this is my standard. Once if I find something that's it's like a thematic investment or where I want to capture my notes, I just put it in a document. All right, so let's talk about weight loss drugs. What's happening? What is GLP-1? I don't want to bore you with all the scientific name, but it helps. This is called glucagon-like peptide 1. Don't ask me what these words mean. I'm not a chemist. I'm not a biologist. I'm not a biochemist. Okay, so this is literally Greek and Latin to me. But it is a gut hormone, and its product is not new. And if you're suddenly thinking that Eli Lilly and they have figured out a miracle drug, it's not new. It was developed to regulate the blood sugar level without use of insulin. So this was being used for your diabetic patients, right? For regulating the sugar level. So, and these drugs, GLP-1 drugs, have been in use for diabetes for many, many years. So it's not that it is entirely a new scientific breakthrough that we have figured out, or these pharma companies have figured out. And there are two major companies which are developing these diabetic drugs, what's called Novo Nordisk, and Ozempic is a brand for the diabetic drug. Other one is Eli Lilly, and Mounjaro is if you go to pharmacy, you're getting a prescription, you can ask for Mounjaro. This is a GLP-1 drug, which is used and prescribed to diabetic patients, right? Now, what had happened? Suddenly, why this diabetic drug? I mean, there are many drugs for diabetes, right? It's not the new stuff. So what suddenly has caused it to, cause such a big storm in weight loss industry, and also disrupting a lot of other industries also? Okay. So a little bit of history. We'll go a little history on both of them. So first of all, Novo Nordisk, like they've been working on this diabetic drug since 1990s. They came up with a newer drug, because the earlier drug, when they used to, the patient takes the drug, it doesn't stay in the body for longer. So then they were mixing various compounds. 1997, they figured out another compound, which is like GLP-1, but it stays in the body for 24 hours. Right? That was approved for your diabetics in 2010. So look at the research, right? That's why the pharma companies, they have to invest a lot. 1997, from 13 years to go through the FDA approval. Then the successor was replaced by a new compound called semaglutide. And they released a brand drug called Ozempic. So Ozempic is the one which is used for treating diabetes. Now, what started to happen? How come a diabetes drug turned into a weight loss phenomenon? In 2017, when Ozempic, the FDA approved, it started to sell in the market to treat type 2 diabetes. But it is okay, that what doctors found out, that the patients who were taking Ozempic were also losing weight more than they have, than they generally lose. And people started to talk about using Ozempic and seeing that they have lost weight. It was not approved for weight loss, but when you take Ozempic, the effect of the drug was that the folks started to lose, the patients started to lose weights. And then, of course, company can't come and say, hey, you start to use it for weight loss, because it is off-label use. I mean, it is a benefit, but it is not approved for this benefit. But doctors are allowed to prescribe a medicine for an off-label use. So even though Ozempic was not FDA certified for weight loss, doctors could prescribe someone Ozempic for weight loss. And that is what was happening. No one on this knew about it. They didn't talk much, but they observed that the doctors have now started to prescribe this drug for weight loss. But they didn't want to talk about it because in history have shown them that weight loss drugs have failed. Right? And then they didn't want to talk too much and promote weight loss. And what if that fails? Is going to eat up into the brand equity of a diabetes drug, right? Because it is known to work well for diabetes. So they didn't want to jeopardize that stuff and start talking about, hey, Ozempic is great for weight loss also. So they kept quiet. They started talking to patients. And then they realized that this is what do you call this? A serendipity, right? You didn't even intend to create a weight loss drug. It was a diabetic drug, and it has a positive side impact of losing weight. Then Novo Nordisk started to do more trial, collect more data to present it to FDA, And then they rebranded and launched a new drug called Wegovy in 2021, which had a higher dose of the GLP-1, and FDA approved it specifically for weight loss. So now if you go and look into literature or some online pharmacies selling weight loss drug, it will be Wegovy brand, because this is approved by FDA as a weight loss drug. Ozempic is approved by FDA as a diabetic drug, not as a weight loss drug. Same is the case with Eli Lilly. They won't sit quiet. They had their diabetic drug. They had their with the GLP-1. So, but they had a different compound, right? They had their own semaglutide. They added their own another compound, and eventually they launched a drug called Mounjaro, which was for diabetes. And then 2024, they changed maybe a little bit potency of semaglutide. I don't know the details, but then they submitted to FDA saying, approve this brand for weight loss. So still it's a GLP-1 compound, but it's a new branding, which has been now approved specifically for weight loss, and that is called Zepbound. So these are injectables, right? These are like you have to take that injection. What's the current status? It costs $900 to $1,000 per month out of pocket in US. Sad part it is, right? Australia is 87, Canada 147. But I don't want to get in the debate of how our healthcare system is so screwed up, but this is the reality, and insurance doesn't cover it for weight loss purpose. So if your doctor prescribes you for Ozempic and says take Ozempic for weight loss, insurance is not going to cover you. If doctor prescribe you Ozempic because you have a diabetic situation, insurance will cover it. Okay? But insurance doesn't cover it for weight loss purposes. So it's out of pocket is $1,000. That is pretty expensive for most people. Demand is super high. The biggest, I would say, if you ask 5 whys on the biggest, the killer diseases in US, many of them will point out to obesity, right? Your heart attack. Why? Because the blood pressure is high. Why? Because maybe overweight. Why? So we know it's a fact that obesity is a root cause of many fatal diseases. Okay? So huge demand. And of course, we want to look good. People want an easy way to reduce weight. Who wants to go to gym anyway, right? And if you can reduce your weight by taking a drug, why not? So it's a super high demand, and that's what shows up. It's like a H100 for Eli Lilly. There's a super high demand, and they can't produce it enough. They're like NVIDIA can't produce enough AI chips. Same is the case with them. So when you have a case wherein the original manufacturer or the pharma company for which FDA has granted them patent cannot produce the drug in enough quantity to meet the demand, FDA will put those in something called a shortage list. So these drugs, semaglutide and tirzepatide, are in FDA's shortage list. Now, because they're in a shortage list, the law allows others, they're called compounder pharmacies, to create same drugs without patent infringement. Right? Otherwise, once you have a patent on the drug, it stays for 20 years or something? I'm not from pharma industry, someone else can correct me, but I guess, you have the long gestation period in which pharma companies make tons of money. But if you are on a shortage list, and let's say if I'm a biochemist, I can pick these semaglutide and, create a portion of it and sell it to you, if you know that I know what I'm doing. And I have I'm not violating any patent, I'm not infringing any patent. So nowadays we see these are called compounding pharmacies are able to create these drugs and sell it to online pharmacies. So we're going to talk about one little later. And they sell it at much cheaper price. And that is why you would see on some of these online, like, I don't know, maybe Good RX or somewhere, if you find out, you may be able to get weight loss drug. It is not actually Wegovy or not a Zepbound, but it has the same compound as those have. So other ways, yeah. So one is get a compounding pharmacist. It's not the same, but it's a copy of Wegovy or copy of Zepbound. And that stuff really took off. FDA came up with a warning saying we can't verify what is in a lot of these compounded drugs that are being offered. FDA has not approved it. And they can't, they are not able to regulate what the compounding pharmacy, in what percentage are they adding all the required stuff. So, and sometimes I think Eli Lilly also sued some compounders, because those compounders are coming and advertising it, saying here's the same drug as Eli Lilly. So Eli Lilly say, guys, we don't know what is in it. So they basically sued them for whatever, miscommunication, etc. But it hasn't stopped companies from continuing to use this compounding pharmacy and sell drugs at cheaper rate. Hims and Hers is selling Wegovy for $199 per month. I guess after they sued, let's say Hims and Hers. And I think once the news came, the stock was like jumped over 15-20%, or lose weight. So we reviewed Hims and Hers in one of our Saturday session. So prescription ingredients, compound semaglutide, starting at $199 per month. Okay. Whereas if you take Ozempic, it'll cost you $1,800 per month. If you take Wegovy, it'll cost you $2,000 per month. But if you take a compounded one, it'll cost you $200 per month. So the sales of these compounded, I don't know if I can call it drug, because it's not really that regulated, those have taken off. So who would want to spend $1,000 if you can get it in $200? So that's that's one way people are getting access to it. The other way is they're getting access to it is a research grade, not even yet, at the same potency as what Wegovy or Zepbound is, but those are like research grade. They're not even not to be sold for human use. They're not even FDA regulated. It's not even regulated at all. So it's a very, very risky. What they send you is a couple of solutions, and they'll give you a link to a YouTube in which someone will come and tell you, okay, you use so much of a solutions to mix these things, then you inject it yourself. But that hasn't stopped people from using it, because it's way, way, way cheaper. Number two, it is available at much easily, because it has not been refined. It is still kind of under research, right? Or you can get it from Mexico and Canada, north and south. It is illegal to transport, but it's okay if you're using it for a personal use. You need your doctor's prescription, and you can find it at much cheaper than, like, Canada is what? And not even talking about, these compounding, etc., but the actual drug. Like Canada was 147. Where was that? How much does it cost? Oh, I had that number. I just saw it right. There we go. 147 in Canada. If you're living in some northern state, man, it's pretty easy. Go and get 5 of it. Your trip is sponsored, rather than paying $1,000 or $2,000 per month. You can get $150 in Canada. So that's another option which people are exploring. What's the side effect? So far, I have not seen any major one. I think yesterday, was it yesterday, day before? some new study came out, and they were talking about a different side effect. I forgot, but some which are documented are ones suicidal tendencies. But in Jan this year, FDA concluded that there is no clear relationship between these medications and feeling suicidal based on the current evidence. Right? Not saying that it mean there is no correlation or causation, not correlation, but causation. But based on data that we may be able to collect later, once we have more and more people taking it, we may be able to find a clear relationship. But based on what we know as of now, there is no clear relationship, right? Because people were reported feeling suicidal, but then say, hey, maybe it's because of some other issue. Muscle loss is greater in when you take these drugs than in your usual weight loss. So in body, our muscles suck away all the glucose. So muscle is sort of a storehouse for energy. We all know that. And to maintain healthy blood sugar, you need to have a healthy muscle. And when you take these drugs, you lose muscle at a faster rate than what you will generally lose when you're losing weight by, let's say, controlling your diet or by exercising it. But then, like in normal case, 20 to 50% of weight loss come from muscles. Under Ozempic and Wegovy, it was 40%. So the risk is not proven yet. Third was stomach paralysis. Right? You have a gastro problems. Again, the test was conducted by doctors at Mayo, and they found out that the ingestion of a food, it takes longer because now the food moves very slowly in your intestine after you take the drug. So stomach is not contracting as it typically would, right? It may only contract, like it says that generally it contract 2 to 3 times a minute after meal. If we are taking a drug, it may contract only once a minute. So if it is not contracting, it is not pushing the digested food into your intestine. So you have, whatever the gastro troubles that you will have because of that. But again, I mean, this is, hey, it's okay. It will take a little more time to digest. But unless I'm going for a surgery for where the doctor has to open up the stomach, doesn't really matter much. So this was my conclusion. While there are perceptible changes to the biochemistry in the body, we haven't seen anything which is worrisome just yet. I have to go and figure out what happened yesterday or day before yesterday, some new study. So that's not included in it. But these drugs are new. We need to continuously monitor the effect that may appear after a few years. Now we are figuring out what some of the COVID shots may have caused to body, like after 4 years. So probably it will take some time. Meanwhile, the stock hasn't been doing great, not only for the pharma companies, it started to disrupt other companies. So latest is sleep apnea. Now the trials from Eli Lilly indicate that using Zepbound is Novo Nordisk. Did I mix it up? I thought Zepbound is Novo Nordisk. Oh no, Zepbound is Eli Lilly. Gosh, now I'm okay. So yeah, the trials, and this is a very recent trial came 21st of June, that taking Zepbound, it reduces the severity of sleep apnea. When the news came out, there is a company, it's a publicly traded company. I forgot. And that stock fell down 20% after this trial news came out, because hey, if I can take Zepbound, I can lose weight and I will not have a sleep apnea problem. I don't have to put in that sleep mask attached to a machine while I'm sleeping, right? So the stock fell down 20%. What also happened during the initial days of launch of GLP-1 drugs, we saw the snack companies like Pepsi, restaurant stocks, they all went down because, hey, customer won't won't feel hungry anymore, right? They'll feel less hungry. They won't have those hunger pangs. So why do we, the snacks will sell less. So that was the case. Not only this, we have seen someone talking about, airlines will become more profitable because you have a less overweight people. So that will be less fuel consumption and all that stuff. You can take your imagination wherever you want to, but I just wanted to give you a primer on this is nothing new. It's a positive side effect that they discovered by chance, and they worked on it. And now it seems to be that this could become a much bigger blockbuster drugs than Lipitor. Right? Easily, this could become like a multi-billion-dollar drugs. Right? Some of the best successful products just came out of nowhere. Right? They didn't even intend to create this for weight loss drug. They just figured it. I think patients figured it out that they can use for weight loss, and Hollywood celebrities were talking about Ozempic and how they are using Ozempic to lose weight. So that's a quick primer on weight loss drugs and what the situation is right now. Any questions? We're almost.
I have a quick
Yeah.
comment. So I listened to a podcast. I've been listening to a ton of podcasts around this and the diabetes too and the weight loss and stuff. And one of the podcasts mentioned that these drugs are, some financial person said they're going to have as big of an impact as the smartphones have had on the economy. It's like a huge statement, right? But economic wise, these drugs are going to, that's what he said, they're going to have just that's the type of impact that these drugs can have on economics, just because of the whole obesity crisis and everything related to it. So that was kind of interesting. But then I've heard other podcasts that say that people that have been taking these drugs for 2 years, 70% of them stop taking them, just because you feel it kind of takes the joy out of food, which is like one of the joys of life. And so, so another statistic is that after 2 years, 70% of the people stop taking it. But anyway,
yeah,
just a couple comments.
No, thank you for sharing it. Yeah, so I think we have as a humans, we have a tendency to overestimate the short-term impact and underestimate the long-term impact. So I don't know whether it's, overall on economy, is it going to be as impactful as smartphone? Who knows? But this, I agree that this could be the most successful drugs coming out of pharma industry till date. Because obesity is such a big problem, not only in US. Now it's we have spread the same stuff. We have given it to other countries also, right? Coke is everywhere, right? Sugar-loaded drinks. So I think China is having similar issues of obesity. It's a big problem in the world. So I think I agree that this will be the blockbuster drugs. Now, the quantum of an impact, I don't know, is going to be as big as what smartphones are doing. You can put any numbers. What happened to the stop? Yeah, seafood diet and portion control. Those are little, people want easy way out. Hey, I want to have my cake and eat it too. So that's the case. So people want easy way out. I can take one shot and don't have to worry about, for a month. I do that. Why have to go for a walk? Why want to exercise? Of course, some people are in a situation where they can't exercise because they're so overweight and their body can't support it. Yeah. But I would, me personally, want to stay away from medicine as long as I can and let my body heal myself. And I know my wife hates me for it. She said, just take this pill, your headache will stop. I'm like, no, as long as I can survive without pill, that's how I want to live. But everyone has different one. I have some people who would rather take a pill and, feel better about it. I just hate taking drugs. I'm like, body is the best natural healer. And as long as I can, control and, you just have to bear a little bit of pain. I don't want to take painkillers. I hate taking any medicine for headaches. All right. So, and again, this whole study, I'll give you the link. There are 3 podcasts that I listen to. And then I basically summarize the thoughts from these 3 podcasts. These are much detailed one. But if you are really interested in this, you can go and listen to these 3 podcasts. It's a Wall Street Journal podcast. But I kind of summarize what I thought from an investment perspective. I want to capture notes. So now my question, and this I saw it very recently. Doctors are quietly prescribing Apple Watch for uses beyond those approved by FDA. So I'm like, is this like Apple GLP-1 moment? No, you buy Apple Watch for one reason, and now doctors are prescribing it for the like heart, something related to heart. Let me just go back and see. For atrial fibrillation, a heart rhythm disorder. So looks like doctors have figured out that the patients that have the Apple Watch, and Apple Watch is seems like, I don't know, I don't even know how to turn it on, but looks like it is pretty accurate and can help doctors in detecting, what are these irregularity much sooner, right? So Apple Watch can detect if it is actually occurring. Otherwise, what happens is patients have to take the drug for 30 days. Now doctors will know, the Apple Watch will be able to tell that when it is occurring, and then doctors can prescribe the medicine only for that duration. Okay. So doctors are telling patients to go and buy an Apple Watch to alert them of episodes of, this atrial fibrillation. Even though FDA has not approved the use of Apple Watch as a device to detect this heart rhythm disorder. That wasn't like interesting stuff. I'm like, wow, I don't know. I mean, I just recently read about this whole GLP-1 where it was like off the label use. And then I saw this. I'm like, okay, this is off the label use. Probably Apple will not be talking about it, until they figure out, a lot of it has really got it has taken off and doctors are prescribing it. And then maybe they can apply to FDA for approval and then come and talk about it, saying, why you should buy Apple Watch. It's a lifesaver for you. So earlier there was a question on Apple. Peter, Apple has got so much of an optionality. Now they will be competing with some other device. I'm not from medical industry, so I don't know if there are other devices that patients have to wear to, to figure out if they are, currently undergoing this condition. If yes, then yes, Apple is in competition with them. If there are no portable devices, then this is a new industry that Apple might open up. Right? So, something I thought I'll share. Do you own KO? No, I don't own Coke. But because I own SPY, so yes, from that perspective, I own Coke. Again, whether I like the drinks or not, I think I'm still be okay to invest in soda companies. Only case where I'll have a little my own ethical concern in investment perspective is maybe cigarette companies. I think I'll invest in liquor company. I'm not, again, investing is different, your ethics are different, but I think one place where I will say I may not invest is maybe a cigarette companies, tobacco companies. But whether I don't like to drink, 32 grams of sugars in a can of Coke, but it's a great investment, so I'll invest it.
Vivek, do you remember last week they said Dr. Pepper is number 2? I don't think so. I mean, their distribution is too small, and they don't have that many sales either. It
I don't.
definitely not global.
Yeah, I don't. But you're right. I think they became number 2 soda company in US. I don't know who's number is Coke still the number 1 or is Pepsi number 1? Let's say, should we go for market cap? Who's the number 1 company? Here's
Pepsi is a snack company. It's not soda company. Pepsi is a snack company.
yeah.
You know,
Okay, Pepsi derive a lot of revenue from the snack, but I guess when it comes to soda, you put Pepsi and a Coke and the same, right? The famed rivalry of Pepsi and Coke. But yes, Pepsi has got much other stuff, and I think you're right. The Dr. I don't even know what's the ticker of Dr. Pepper, but I guess one of them, Dr. Pepper, has replaced either of these to become the number 2 in soda. But didn't another company won the case against?
excuse me, Vivek.
Yeah.
I look for sales for Diet Coke, right? But very rarely is Diet Coke even. I'm sorry, Dr. Pepper having sales, and it has a lot less distribution avenues. So I think those are doctored statistics.
No, I don't. So again, I think it depends upon what we're doing and which area we live in, right? So for me to think that Dunkin' Donuts is a small company, I mean, go to East Coast, you'll see Dunkin's everywhere. So I don't think the numbers may be fabricated. There probably are that many people who will be drinking, because if it is fabricated, they'll be sued by SEC, right? And whatever the federal FTC and all that stuff. So I don't think they're gonna take the risk of fudging the numbers. Just that, hey, I'm not drinking it, and I'm not aware any one of my friends drinking it, but then I'm only talking about a very small circle. So that might be the case. Aditya says, I have runner friends who use Apple Watch to measure oxygen max and track their runs. Yeah. Oh, Massimo. Oh, so Massimo in the Apple had. So again, I think Apple will figure out how to tweak some of the changes and get off the patent. Was that the case wherein the judge told that Apple can't sell its Apple Watch? Was it last year during near Christmas and all that stuff, and then was granted some injunction? Okay, you can still sell it. Something I remember around that. But it is Apple. They'll figure it out. They got a battery of lawyers. So I don't want to write off Apple. There's some update on EV sales. So net on China, like NIO posted new records. XPeng had a 24% year-over-year rise on their EVs. NIO had how much over percent? They had like 144% year-over-year rise. Then third one is Li Auto. Li Auto had a 46% year-over-year growth. So essentially the message is Chinese consumers probably are, our economy may be rebounding, consumers are spending again. So we see a lot of these numbers coming from Chinese EVs in terms of their EV sales. And Tesla, that we talked about at the start of the discussion, is on fire, right? Tesla is up 38% in 9 days. And the heading on the Bloomberg was Tesla sales slump, because Tesla sales declined by 5%. But it was better than previous quarter because it declined 9%. So it is all about expectations. So Tesla's China deliveries are down 24% in June. 24% down. Right? But it's all about expectations. So that's why in a short-term basis, what stock will do after the earnings, only God knows. If we've shared with you saying Tesla's deliveries or sales will be sales will be down by 5%, and in China sales will be down by 24%, right? Would you believe the Tesla stock will be up 40%? No way. But it's a game of expectations. So expectations were even lower. Number two factor, which I think contributed, the second one which contributed in such a stellar stock performance was your energy storage deployments. So overall energy storage deployment, I think it doubled or something like that, which is twice the forecast. Right? So whatever the analysts were projecting in terms of energy storage, that business has started to become big. It like blew analysts' expectations, and Tesla delivered more than 100% beat on this one. So I think these were the two factors that brought back bulls into Tesla, and Tesla is up close to 40%. Does it deserve it? Who knows? Short term, anything can happen. But Adam Jonas has been a pretty big bull on Tesla from Morgan Stanley. So what did he talk about it? Tesla getting his mojo back little more than 2 weeks ago. Our clients were preparing shareholders to reject its comp package. We talked about it. Fast forward today. Clients are beginning to ask us about the positive catalyst into second quarter results and beyond. We are getting asked for our proprietary Tesla energy model and even our humanoid robot TAM model. Is this the same Tesla from early June? Figure it out. That's why market gives you opportunity. And if you have done your study in Tesla and if you had built some conviction in Tesla, yeah, we had an opportunity to buy Tesla's 140. Well, now Tesla is back to 250. Right? Oh, this was when April. And now what? It's like 2 months, right? April, this is like mid 4th of April. Now this is close to 4th of July, just 2 months. So, and other thing to notice, we don't have to always cave in or hurry to buy it immediately. There are a lot of opportunities that market provides. There is no need to buy Tesla at 400. Right? We don't have to give in to FOMO. Market does provide opportunities. We just have to make sure we understand what's our comfortable price at which you are willing to buy based on what you understood about the business, and you want to comfortable and say, you know what, this is where I can buy. My price was, I think, 210 or 220. And I said, I'll start building position around that. So I started doing short put spread at 220, 200, 180, 170. So you figure out what your price is. And yeah, some of you know, I've been talking about Tesla for many years, but never had a courage to buy it at where it has been trading, over the last or all these years. So that's a Tesla.
I got assigned on my call position in Tesla.
So I have an iron corner because Tesla, these are like one of those momentum stocks, right? We talked about Teslas of the world and Palantirs of the world. You never know how long this craziness continues. So I always do a spread when I do a call. But so, I don't know, will it go to 300 or will it come back to 198? This is the most difficult decision. No one knows. You may want to roll it or try to manage it. Last one for today. Hello. Dad said China has costly and restrictive petrol regulations. But China, I think it was yesterday's news, China has approved Tesla as a vehicle to be bought by government agencies. Because earlier, Chinese government had put a restriction saying all these EV connected cars, especially US-made or foreign-made cars, they were not allowing governments to buy it because of security concerns. You exactly know where that government official is going. They may be going to some secret military place, and China didn't want them to know. But I think day before yesterday, maybe yesterday, they approved Model Y for use of government, for government departments. So I guess that's a tailwind. All right, last one. HELO. Anyone holders of HELO? I know some of you hold JEPI, right? So JEPY, EPI, and I think JQLD, whatever those JP Morgan's very successful ETFs. So there's another ETF from JP Morgan. It's called Hedged Equity Laddered Overlay ETF. So big names, but if you know and understand how options work, it's nothing fancy in here. So now the difference between, you know, the JEPI, etc. is, so JEPI is basically your S&P 500, and they'll sell a call option against it to generate income. HELO is, it's not S&P 500, but this is more active. So under normal circumstances, fund will invest 80% in equity securities. So basically, the fund manager will pick up the securities which they think are undervalued and has got a significant upside. And I'm saying they think. It's like an active management. And on top of it, they will overlay option strategy, which is nothing but buy a put spread. So which will give you protection in case market goes down up to a certain level because it is a spread, and they'll sponsor this put spread by selling a call against it. So your upside is capped because of that call, but you get some downside protection and you don't pay too much. Now, if you are in a camp which says S&P is already up 16% this year, I don't think it's going to go up, you know, more than 20%. I mean, how much more high can it go? Let's say if you're in that camp, then you may want to say, you know what, I want to buy some protection, but I don't want to pay for it. So either you do this on the stocks that you own. I call it as kind of a, you know, collar spread. Right? You put a collar around where the market is trading right now. You sell a call against where the market is right now, go maybe 5% up and sell a call against it, and then use the proceeds of that call to buy a protection. You bought a, let's say, put spread. So this is what a HELO does. Now it is called laddered because they are doing this for 3 months rolling period. You never know, market will crash this month or the next month or afterwards, or maybe it won't crash for first 3 months, but may crash in last 3 months. So you need to have this protection available on your portfolio. So they do for rolling, you know, 3 months period, for which is, you know, each month apart. So essentially that's what the HELO is. So if you want to get, either you do this on your own. I mean, this is why when my majority of my hedge trades will be similar to this: sell a call or sell a puts, you know, sell a call, buy put spread, or just sell a naked call against indices. But if you don't want to do this, and if your portfolio, I mean, you can hand over that cash which you were willing to put in S&P 500 or closer to it, to either JEPI or HELO, and they'll invest in companies which are, you know, closer, similar to those in S&P 500, but not all S&P 500. They'll pick companies from S&P 500, and then they will overlay these option strategy to give you downside protection at the cost of missing the upside beyond a certain point. I couldn't find how far do they go out to sell a call in their prospectus. So that information I don't know. Expense perspective, it is a 50 basis points plus whatever transactional cost or the tax that you pay because of a portfolio churn, that will be additional. But if you like it, it is an option available in which you don't have to do the options, someone else is doing it on your behalf. That's the last part of today's discussion. Anyone interested in HELO? Let me see. How much AUM does HELO has? Okay, let's go here. 891 million. So still pretty small. If you look at their JP, it has grown to become really, a force to reckon with in ETF world. It's like $33 billion invested in JP. But JP doesn't give you downside protection, it generates income, right? 9-10% yield or something like that. 12-month SEC yield is 7%, so 6.88%. Yeah, so pretty decent yield. So a lot of retail folks are pretty interested in JP. You get some upside exposure up to a certain limit, and then also you can get almost 6-7% dividend income. So it looks like based on the success of that, they also said, let's do some more option related instruments in which we can use options and sell that to customers. So they had HELO. All right. So that was the last part. Any other questions? Anything else? I can hang around, 12:25, right? So I can hang around for another 5 minutes if you want to talk about anything else. So AI is Sequoia will cover next week.
Could you talk about why China only has 2 years patent protection and the US has 6 years over Wegovy?
Oh, I have no idea. I don't know. Maybe because, China's, they don't want to they don't want like pharma. It's not, first of all, it's not even the patent is not from Chinese company. So how do they care if they lose the protection sooner? But if they don't have any restrictions, then Wegovy won't even, the Novo Nordisk won't even sell it. So maybe they figured out what's a middle ground wherein after 2 years, Chinese companies can also start selling, the generic drugs. So as long as it is protected by patent, you can't sell generic drugs. You can't create a generic drug out of it. Right? But after it's off patent, then you will see other companies coming up with those generic drugs and sell it in the market. But then that start to eat into the profits of the pharma companies. That is why, as long as it is protected by patents, pharma company will try to make as much money as they can. So I guess that's it. I mean, you have to find a balance. If you don't give any protections, then the companies won't even give the drugs. This is what's in it for me. So it's a balance between how big the market Novo Nordisk think it is and how much of patent protection they can afford to let go. I guess that's it. Aditya says, any thoughts on lithium motors? I have not even looked into lithium motors ever, I guess. I don't recall talking about lithium motors. They've been around for some time, so this is not like some new fad. What did they do? Okay, let's look into what do they do.
Yeah, so it's a automotive retailer, and it took I noticed it because the stock's been falling for some time. Yeah, it will be interesting to know your thoughts.
Okay, so basically it's an automotive retailer.
Yeah.
End of the day, right?
Yeah.
Yeah. I don't understand this industry, so I have no opinion on how this industry. Right now, I know a lot of automotive retailers are suffering from the hack of I think that is also Snowflake hack, CDK. And I did not know that that's one choke point looks like majority of the retailers in US use a software to manage their inventory and all that sales stuff, which is provided by the CDK Global. And CDK Global had a hack, and all those retailers could not use computers. And then they were figuring out, so they were not even able to sell the cars to customers because everything is now computerized. You don't even sign some of the financing papers. They'll turn around the iPad to you and it's just signed digitally on their iPad, right?
No.
So this, after the cyber attack on CDK Global, I think they mentioned that even by the end of this, like June, they won't be able to restore it. I don't know what the latest one is. So I know a lot of these dealerships have probably, at least this quarter, they have a tough time. I guess, the purchases will come back. But again, I've never looked at this dealership business. One thing which I know is the dealers make a lot more money in an after sale than during an initial sale. Right. So let's see what's there.
Yeah.
Growing.
So I'm new to America, so I was just wondering if people here have first-hand experience of this lithium motors.
So one thing is true, you can ignore these. I will discount these two, growth of 70%, etc., because that was like everything was shut down in COVID, and there were hardly, we had such a big shortage of automotive vehicles. Oh, sorry, I was not sharing. No.
Yeah.
Yeah, there was a big shortage of automotive vehicles, so they grew revenue 73%, 23%. That's because of the tailwind from COVID. So I won't give too much credence or weightage to these two, but it's let's say mid-teens growing business. I don't like this. Sorry, obviously, because the EPS is down. They bought back some shares, 2%, not huge. Let's look at their operating margins, operating income, other expense, net income, operating margin of 5%, gross margin 16%. We'll have to see how does that compare with the other dealers. Right.
I think the other dealer, like AutoNation, they buy back like a lot of stock. I think like 15-20% or something like that.
I think that's Advanced Auto Parts, if I'm correct. What is it? AutoNation. It's called a corporate cannibals. I think that's what they actually have a name. So basically, these are the companies which will just buy away their shares. And you're right, one of them, it's AutoZone. Okay, not Advanced Auto Part, which is AutoZone. Yeah, so they are famous in terms of just keep buying back their shares, and they bought back, 84% of their shares. So even if they don't grow the revenue, you still got a huge tailwind just because of these buyback. I don't see in lithium motors that they've been doing buybacks similarly. So what AutoZone is AZN. Not. Let's see what is AutoZone.
I think AutoZone, they sell like car parts, and like AutoNation is like the same like dealership type business.
Okay. So share repurchases, 3 billion, 4 billion. Let's go to the income statement. There I should see share outstanding. See, every year they've been buying back their shares. 7%, 10%, 5%. They were reducing their share count. And yeah, that's been the case since 1999, guys. Right. So they don't have to, even if they don't grow, let me go back and see. Yeah, every year, 11%, 12%, 9%. Every year they've been just focused on buying back shares. So even if they're growing 10%, 7% revenue, or they're growing their income by not EPS, because that's per share. Essentially, I think even though the revenue is growing only 6%, because they've been buying back their shares so much, your earning per share is like double, more than double, like 30%, 13%, right? That's huge. And this is where sometimes you don't have to, ignore the companies that are not growing in revenue. But if they are, and many mature companies will reach at a stage where the revenue growth is not coming, but then you return a capital to shareholders, buy back a lot of shares, right? And still, and earn on per share basis. Cool. All right, guys, I think that's it for today. Thank you for joining in. So we will have our next session on Wednesday. Session number 11 of Options Bootcamp. We'll be talking about the remaining Greeks. Okay. All right. Thank you, everyone. See you on Wednesday, otherwise next Saturday. Bye-bye.